The market is crashing. Investors are witnessing a historic downturn with panic spreading like wildfire across trading floors worldwide. It's a bloodbath out there. The Dow is down, the S&P is down, the Nasdaq is down. Every major index is plummeting, leaving investors in a state of shock and disbelief. Investors are running for the exits. The fear is palpable as traders scramble to cut their losses and salvage what they can. On Tuesday, March 4, 2025, the stock market experienced its largest single-day drop in months. The scale of this decline is unprecedented in recent history. The catalyst for this dramatic sell-off? A sudden and unexpected policy shift. President Trump once again decided to play hardball on trade. His aggressive stance has sent shockwaves through the global economy. Trump slapped new tariffs on imports from Canada, Mexico, and China. These tariffs are seen as a major escalation in trade tensions. These tariffs, which took effect at midnight, are no joke. They represent a significant increase in costs for businesses and consumers alike. We're talking 25% on goods from Canada and Mexico, and a doubling of existing tariffs on Chinese goods. The economic impact is expected to be severe. Trump's message is clear: America first. But at what cost? The repercussions of this policy are just beginning to unfold, and the market is feeling the brunt of it. These new tariffs weren't entirely unexpected. Trump has been threatening them for weeks. But the market, as it often does, seemed to think he was bluffing. It wasn't a bluff. Canada and Mexico, blindsided by the move, were quick to retaliate. Canada immediately imposed its own tariffs on a range of U.S. products. China, while also condemning the move, took a slightly more measured approach, announcing tariffs on U.S. agricultural products, but delaying their implementation. The trade war, which had been simmering for years, was back with a vengeance. The market reaction to the tariffs was swift and brutal. Companies with significant exposure to international trade, particularly those reliant on Chinese manufacturing, were hit the hardest. The ripple effects were felt across various sectors. Target, the retail giant, saw its stock price tumble after warning that the tariffs would likely eat into its first quarter profits. Best Buy, already struggling, issued a dismal sales forecast, sending its shares into a tailspin. The retail sector was clearly under siege, but it wasn't just the retailers feeling the heat. Tech darling Nvidia, a major player in the artificial intelligence sector, saw its stock price plummet, wiping out 6 months of gains. The tech sector, often seen as a safe haven, was not immune. Nvidia's decline was a stark reminder of the interconnectedness of global markets. The fear is palpable. Options traders, those in the business of betting on market volatility, are bracing for a potential crash. The uncertainty is causing widespread anxiety. Bond investors seeking safety are piling into U.S. Treasury bonds, driving down yields. The flight to safety is a clear indication of the market's nervousness. As the market grapples with these shocks, the long-term implications remain uncertain. Investors are left wondering how deep and lasting the impact will be. Even the Federal Reserve, the usually stoic guardian of the U.S. economy, seems spooked. The central bank, known for its measured and calculated responses, is now facing unprecedented pressure from all sides. Financial analysts, who usually maintain a calm demeanor, are visibly worried, reflecting the broader market sentiment. Traders are now betting that the Fed will be forced to cut interest rates, perhaps multiple times, in an effort to stave off a recession. The once optimistic outlook has turned bleak, with many fearing that the economic downturn could be deeper and more prolonged than initially anticipated. Treasury Secretary Scott Bessent, in an attempt to calm nerves, insisted that the sell-off was merely a temporary adjustment. He emphasized that the fundamentals of the economy remain strong, urging investors to stay the course and not to panic. The market, however, seems less than convinced. Despite reassurances from top officials, the persistent downward trends and the sheer volume of sell-offs indicate a lack of confidence among investors. The losses incurred during the recent market plunge have effectively erased all the gains made during the Trump presidency. The sharp decline has wiped out years of growth, leaving investors and policymakers scrambling for solutions. The bull market, it seems, is officially over. The era of sustained growth and optimism has given way to uncertainty and caution, marking a significant shift in the economic landscape.